Here's the midday update on gap fill. This is gap fill 2. It's about 2 hours left of trading today. This is the gap fill 2 strategy from my book. Got short at the open based on the trend, the overall trend that we look at 1057.50, up about 10 points. Want to take a look at how it's done. Look at the TradeStation performance summary. Here's what it's done. I went back 12 months, but since this looks at the 100-day moving average, these are only the results for since about January the 22nd. So this is just my gap fill 2 strategy alone. You can see it could make another equity peak today if we do well. Let's look at the recent months and how it's done in the current market environment. This is without slippage and commission. You see the average profit per trade is almost $90, a trade. So when you're looking at the monthly results, the last 4 months have done pretty good. So if you're looking for something that's been working in this market environment, this gap fill 2 strategy in my book has done well. It doesn't trade that often. 7 times this month, 5 times last month. And so you've got a selective approach. Let's take a look. I also want to show you the gap fill 2 combination, which combines gap fill 1 and gap fill 2. So when you look at the daily report every day, you see gap fill 1, gap fill 2, and gap fill 2 combination. Gap fill 2 combination, for those that don't know, is the combination of gap fill 1 and 2. It's gap fill combination, not 2. Just gap fill combination is the combination of gap fill 1 and gap fill 2. So I want to pull that chart in here to this screen so you can see what's going on. It also took the same trade today because it combines both strategies, and so it took the gap fill 2 trade today, and on days that gap fill 2 doesn't trade, it takes gap fill 1 trade. So if you wanted to trade both gap fill 1 and gap fill 2 in one strategy, it's covered by the gap fill combination strategy, and you can see the signal names are gap fill 2, and then if you see a gap fill 1 trade, there's another gap fill 2 trade. See, these are some gap fill 1 trades. The last 4 trades are winners, but let's look at the performance summary as well over the same time period. Went back 12 months, but then it has a look back of several months on the daily charts, and this is the results since, it says up here, it says 826 to 826, so it went back a year, but it has a look back period that it has to meet. So the chart on the first trade actually started on January 22nd because it had to look back 4 or 5 months to look at the trend data as well. So you can see pretty good equity curve here. We're sitting at new equity peaks. Look at the periodical returns. It's also done well in this current market environment. It trades a little bit more frequently because it trades both gap fill 1 and gap fill 2. So these are in my book. They're fully disclosed. If you haven't gotten the book yet, click on the link below and you can get the book. See how these strategies work and implement them for your trading. Here's the end of the day. I'm showing gap fill 2. Here's the trade it took. We got out at 1044.75 on the close, $612.50 with slippage and commission. So pretty good trade. Got short near the top and covered near the end of the day near the lows. So good downtrend. Gap fill combination took the same trade since it takes every trade that gap fill 2 or gap fill 1 takes. Another strategy I want to show you today is EVP2. EVP3 actually, Euro currency. This strategy, it broke even today, and we had a couple of small losers in a row. So I want to show you the benefits of a break-even stop loss as we got in, and we're looking to get a runner on this. If we don't, we have a break-even stop loss, and so the market came back. The Euro's been just really choppy lately, and no real separation. Our Viper Euro strategy has struggled, but EVP3 or EVP1 actually, I call this EVP3, it's EVP1. I want to show you the results for that and what it's doing so far. This is with slippage and commissions. You've got here are the results since 2003. With slippage and commission, $71, almost $72 average profit per trade on 500 trades. There's the total net profit. There's the drawdown, less than $4,000. Here's the equity curve. As you can see, we're near equity peaks. Let's see what it's doing. We have some small losers here. We got some good winners, and then we have a small losers because we're putting in a break-even stop, or we're controlling our losses. So this strategy focuses on small losers and letting profits run. As you can see, there is some losing streaks where it gets stopped out here, but some bigger winners, and then The equity curve shows the results. And let's look at the annual profits as well. Here's the annual profits that it's done. In 2009 it made that much, and in last 12 months it's done that. So it's a potential strategy. The euro has been choppy, yet it's still been profitable. So this fall the trends may pick up, and so this strategy may catch up. The last 12 months might catch up to the average for 2009, and this might be a strategy you want to add to your arsenal. Check out EVP 1, 2, and 3, and it might be a strategy that would work for your portfolio or independently if you're looking for a selective strategy that controls risk.